This is the only market structure concept you need to scale up your trading journey. Yeah, remember my humble self, Banks, the founder of KoleForex Academy, and today we want to deal with something that is very important in the trading world, which is market structures. As we always say, that trend is your friend. Yes, the trend is your friend. So that means when you learn how to follow the trends, it reduces the number of losses you struggle with in the market. Irrespective of any strategy you are trading, this particular concept is for you. So if you can master this particular concept, it will make things very easy for you. Never forget to click on the subscription button. Alright guys, let's go to the market. Let's see what the market is going to give to us. Now let's look at my screen. The first thing we are looking at is break of market structure and that of change of character. We all know that whenever we are talking about break of market structure, that is when market is moving in a particular direction. Let's assume the market is going up. Definitely the market will continue to break structures to the upside, structures to the upside. So break of market structure is when market is moving in a particular direction. So definitely it's going to be breaking structures in that particular directions. Why change of character, this second guy here, is when the market change movement. That means when the market is a sell market, market convert from a sell market to a buy market. And I always advise, never get married to your trend, because the trend can change anytime. So if you understand break of market structures and also change of character, which happens to be the major things we'll be looking at in picking up our trend today. Now let's now go to the three different ways as ways the market move. Now the market moves in waves. Is either the market is buying, or the market is selling, or the market is ranging. For the sake of this particular concept, I will always advise, please and please only follow a trending market. Like now, if you look at my screen here, I have an uptrend market. Definitely this is good for what you want to be doing. I also have a downtrend market. Cool. So it's either the market is buying or the market is selling. Why the third one is a ranging market? Well, anybody can make money in the market trading anything, but from my years of trading, I got to know that it's better for you to follow a trending market. Yes, that is very clear to you that, okay, in short, when you even pick somebody that does not even know anything in the market and show that person that what is happening on this market, that person can show you that this market is going up or this market is going down. So definitely it's easy for you to follow the flow. For the sake of this concept, I'm taking out ranging market. So we are just focusing on uptrend or a downtrend market. Now, if that's our major thing we are looking at, now let's look at it based on a trend. Now, what I'm looking at for an uptrend is I expect an uptrend to create a new high that is higher than the previous one and a new higher low, which is a low, but the low is higher than the previous one. Then let it create another higher high, create a higher low, create another higher high. So in respect to that, what I'm looking at is allow this market to just give me a kind of correction back to the downside. I join the bar again to the upside. That's what I'm looking for in a downtrend. I've noticed what we have on this screen. This guy have been breaking structures to the upside, break of market structures to the upside. Now, definitely we are now looking at a trend continuation in this kind of a market we want to buy. And for the sake of a downtrend, let's look at what we have here. For the sake of a downtrend, I also want to see market breaking structures to the downside. This is a very good example. I have a high that creates this low, and I have another high that creates this low. Definitely, this is a lower high, this is a lower low, a lower high, a lower low, lower low. Expect to create a new lower high to go and create a new lower low. In respect to that, if you notice what is happening on this chart, the market continues to break structures to the direction of the market. So immediately you understand, which I believe most of us, at least most of us understand the trending markets now. Immediately gets to understand your break of structures and also understand your change of character. When we are talking about change of character, let me quickly show you something. Now, the condition for me to have a change of character is when I have this impulse movement to the downside and I expect to retrace a level here to get a new lower low, and the market chooses to go above the previous high. That's a shift in the market, because the rule for a downtrend is for market to continue to create a lower low and a lower high. So immediately the market push to the upside and take out this high. Now, and I expect the market to come back to a particular certain level to create a new higher high. So that means the first movement here we have here is what we call change of character. So we tag it as change of character. So now that is the first movement against initial trend. Yeah, so the same thing is also applicable to that of an uptrend. So having understand these two concepts, so let's come back to a textbook example or representation of what we really want to go and look for on the chart. Now, looking at this textbook representation, if you notice what we have, this particular chart has been creating, it has a low here, and the low pushed up to create a high. That was the genesis of this particular direction. And if you notice, the market pushed to the downside and gave me this particular low, but this low happens to be higher than the previous one, so we call it a higher low. And the market went up and gave me a higher high. I have another higher low here. I got another higher high. If you notice, something is common. The market continues to break structures to the upside. The market continues to break structures to the upside, and that is a sign that this market is an uptrend. Now, how do we now take advantage? Looking at the concept we really want to master today. If you notice that whenever market breaks structure to the upside, it starts printing more of candles to the downside. Let me show you. We have an impulse movement here. We have a correction here. Now, let me use these two so that we can get it easily and recognize those directions. So here, I have a correction after the market has given me an impulse movement. See, this concept is so easy that especially for beginners who are trying to figure out themselves in the market. Now, let's come back to our charts now. So, immediately the market create that higher highs. I'm expecting market to give me another correction back to the downside. Now, this correction that you are seeing here happens to be the major thing you are looking at as a trader. Impulse movement. Then I want to take advantage of the market giving me a correction. And once the correction is done, I also want to take a buy following that particular direction to the upside. And I remain in an uptrend. As long as the market continues to break structures to the upside, I remain in an uptrend. Now, looking at it here, I'm expecting this guy, the chart, to come to this particular level here to go and create a new higher high for the uptrend to continue, for the market to create a new higher high. But if you notice what happened here, the market pushed to the downside and do what? And break the last low to the downside. That means there's a shift in the market movement from an uptrend to a downtrend. So what that has given to me, that means the first movement against that my initial trend, that is what we call change of character. So in that sense, the market has given us a shift from an uptrend to a downtrend. So once that kind of thing occur, what I'm looking for is for this guy to go and give me another correction, and the market should respect the previous high to do what? To create a new lower low to the downside. And that is where we will be taking advantage to join the market. So as long as the market continues, if you notice here, we have another break of market structures to the downside. So as long as the market continues this direction, I'm expecting the market to do what again? Let the market give me another correction to the upside. Then take a sell again, and I continue selling this particular currency as long as market continues to give me those directions. In respect to that, I want to go to the charts now and show us how I'll be able to backtest and also trade this particular concept. Let me show you. Let's come by this Euro New Zealand. Okay, let's see what we have here. If you notice what we have here, at this junction we have a break of market structure to the upside. Note guys, markets must break structures. This is very, very important. You must see the market, you must understand the direction of the market. So don't just go and be looking for impulse and correction and you don't master your trend. The trend is your friend. So immediately you understand that okay, the trend is going up, then you are taking the advantage of the lower time frame, your internal structures to get this done. So here we have a break of market structure to the upside. If you notice here, we have a very good corrections. The correction is a sign that the market is coming back to a level whereby you can join. And that's why I said I'll be sharing more light on how to enter the trade, or also the trade condition. I don't want this video to be too long, that's why we just have to cut it short here. So let's look at it again. We have impulse movement to the upside, which is here. And if you notice, the second trace comes up here, whereby after we had this impulse movement, the market did what? The market gave us a good correction back to the downside. Looking at it, you don't need to force the market. All what you just have to do is to look for a way to join that uptrend. Here now, the market has done under impulse movement to the upside, and that is a sign that the market is going up. Now, let's see what happened here. The market broke to the downside, and here, the chart presents to us another good concept. Okay, let's look at this one, guys. We have a push up to the upside. The market now gave us this correction. This is a very clear one that when they were buying, I have a very fast movement to the upside. That's a good sign for me. Now, we now have this correction. Immediately the market breaks structure to the upside. See what happened here. This is another good and a very clear setup here. If you notice here, the market gave us another impulse correction. This is another impulse movement to the upside. This is another good correction to the downside. Now, if you can be able to come up with a very good data, let's see what happened here. We're expecting the uptrend to continue, but what happened? The market changed movement from an uptrend to a downtrend to the downside, and the next expectation is for this market to continue selling. As long as the market is in that particular direction, see what happened here. I have an impulse to the downside, then I got this particular correction. This is a sign that I'm expecting the sell to continue, and see the way market just tapped into our order block and the market sold to the downside. Just like what I said, other details things will be coming on board that will explain how we get our entries in the market. For the sake of this video, I just want you to master this concept, right? So let's come back to our chart again. Here again, what happened? We got another change of character to the upside. Then we expect the market to do what? Create an impulse movement. Look at the correction. This is very easy. The market will always showed you its direction. The only reason why we struggle most in the market is just because we are not being patient to wait for the markets to present to us these are hedge or these are conditions which we've taken our time to build a lot of data. Yes. So now let's look at it again. We have a very good impulse move. After we have this US to the upside, the market gave a clean correction and pushed to the upside. That thing continues to repeat itself all over. See, the market is all about history, and history will continue to repeat itself all over and over and over again. Now, see what happened here. We have this push up. Look at the corrections to the downside, and the market did what? Give us another good impulse movement to the upside. So all what you just have to do is to be patient to wait for the market to give us that particular movement we are looking for. Look at what happened here. This is a very good movement which market has given. So imagine you are looking at the market, and all what you are looking for is for the markets to give you an impulse movement, right? Creating a correction to the downside. Create another impulse movement, giving you corrections to the downside, which is here, corrections to the downside. And all what you are just waiting for is allow the market to retrace back to that level, to that corrected level. We call it discount level if we're looking for a buy. We also call it premium level if we're looking for a sell. These are zones at which you want to join the market, which I'll be explaining in a subsequent video. Now, that trend continue as long the market is giving me impulse movement and correction. In respect to that, let's check what I was able to do on good. I've really been using this to trade. In short, it is my concept, is what I love to, because it's very easy for me whenever I come on my chart and
I want to trade. I'm not buying because the market is buying, neither I'm not selling because the market is selling. So if you check what we have here, the market has given us impulse movement here on gold. Look at the correction movement, a very clean and clean correction. And the guy came to a very good discount price and the market pushed to the upside. Look at this level here too. This was a very good one after the market has done this particular impulse movement to the upside. Look at all the movements for the correction. It was a very clear one and the market came to a very good demand level. All what you just have to do is put your pending order here, apply a proper risk management. Once market get there, let market trigger and goes in your favor. And if you check what gold has been doing, truly for me, I prefer to buy gold than selling gold. Yes, because if you check gold on the higher time frame, weekly time frame, monthly time frame, gold has been a very strong bullish movement. So in respect to that, I feel more comfortable, more confident in buying gold. Now let's see what happens here. Just like what I said the other time, market is all about history repeating itself. See what happened here. We have this correction here and the market creates impulse movement. See what happened here again. The market gave that same correction, another impulse movement. Here it's that same correction, another impulse movement. So what we are looking at is market presenting to us that same thing he has been doing. You understand that now at this particular day I'm recording this, gold has done change of character to the upside, which is this high to the upside here, and that shift to the upside. And I'm waiting for market to even pull back to certain levels where I can join a buy again. These are things I've been doing. I think we took a trade in our community that, so as at the time I was recording this trade is running, and if you see what is happening here, it's just the same concept, guys. The same concept. See, I have a break of market structures to the downside, a break of market structures to the downside. And what happened? We were expecting the market to do was to give us clean corrections to the upside, and we set our pending order, the trigger went blues. Now let me show you some other setup that we took in the community. Okay, look at what we have here. Look at what we have here. This happens to be a very fast movement to the downside. That is a very clean impulse movement. So what comes to my mind is allow the markets to take its time to do what? To create its corrections. So by the time it creates its corrections, I'm positioning myself in a very good area to join the sell. That same thing that occurred there, see how it repeats itself here. Same concept. So see what happened here. The market creates this impulse movement. Look at how the market happens to give me the correction. A very clean corrections to the upside. For those people who want to do maybe day trading or scalping, which I said I will be creating a video on how you can take advantage of these internal structures here. These internal structures here. These internal structures. That's why you have all this buy order here. Some of our community members, they were buying. So what they were doing is they were joining the market to create that correction. Why me was patiently waiting for the impulse movement. Now, let me tell you something about this concept, guys. When you understand what you are looking for in the markets, what I noticed that it makes things easy for you, and also it gives you that confidence for you to trade. I know these are two things that straight traders, I personally struggle with that kind of a thing at the initial stage of trading, because I was always scared to even place my trade, despite the fact that I even have my risk management conditions very early. But I was still scared to trade. Why? Because I'm looking at the market might likely go in my favor. I may likely lose this trade. But immediately you find time to have a database system. When I'm talking about a database system, is you'll be able to run your back testing. You'll be able to develop a kind of list of conditions, right, which you want the markets to meet before you trade. You are not just doing it because somebody showed you. No, you are taking your time to also do your back testing, to also come up with data that shows to you that, okay, if I trade this particular concept on Euro GBP, definitely out of my 10 trades, maybe 6, 7 goes in your favor. If you have a very good risk reward ratio, guys, listen, a very good risk reward ratio with your risk management, it will keep you up in the game. I promise you guys, I'll be having a content in respect to that. Yes, that's why you have to subscribe to the channel, so that in the subsequent weeks you have access to all these informations. All right. So I will post, okay, I think I will post it here. You see it. We have this trade taken and it's run about 1 to 40%, just following the same concept. Now let me show you the recent one that we have here. Now we notice that the market, because if you check Euro GBP on the weekly, is still selling, and that's why everything we are looking for on this particular chart is just to join a sell, just because the higher time frame is selling. See, the trend is your friend, and it will always be your friend. What you just have to do is to take some time and learn how to master how the market moves in waves. Let's see what we have here. This is a recent trade now that we took on our technical Tuesday. That was when we had this analysis, and we catch it up and move with it. I can show you series of this GBP. Okay, let me check Euro New Zealand. Oh, okay, we had that same concept here on Euro New Zealand. Can you see? We had this drop to the downside, and what happened? The market gave us correction. We took a sell. That same movement has given us a buy movement. Can you see what we have here? Impulse movement, correction, impulse movement. So all what you want to do is to find a way to join the market when the market want to create. Okay, I had that same concept here on the GJ. See what GJ was trying to show us. Though the level at which we were waiting for GJ to trigger, the market did not tap in, and that is why we always tell our people that we don't control the market. We don't control the market. It's just a condition that we're expecting markets to meet before we buy or sell. Expecting GJ to come to this particular level for us to join a sell from here. Yes, we're expecting the GJ to come to here because the market has given us change of character to the downside. But I haven't said that the market did not come there. That's fine. That's cool. No problem. A better setup is still coming again, because this pattern will continue to repeat itself. Yeah, I have something on Euro AUD that's still recent. Okay, yes, Euro AUD give us another good concept also. You know, after the market creates this particular impulse movement, look at a very clean correction, a very clean one, where to the upside the market has given us a go ahead that is selling already. So we're just waiting for that market to give us that push up, then we join the sell to the downside. Okay, we had another one, same concept, repeating itself all over and over again. So all what you have to do is, how long have you been able to come up with quite a number of data that have proven to you that this your particular concept strategy is trading. Please take note, guys, this is not just the only thing I'm looking at, but this is a basic approach to the market in respect to market structures. You can there's a lot of videos when it comes to this, but take this, because this is very, especially for beginners who are trying to figure themselves out in the market. Take advantage of this kind of videos and don't start trading this concept. I know I said it at that time that wisdom is when you can be able to pick up a knowledge and apply it. If you're not applying it, you don't have anything. It's just a waste that you have to. So watching the video alone won't give you that profits. You have to go back to your own drawing board, figure out how this thing really works. By the time you figure it out, by the time you pick your chart, and please, this can work out on any time frame. If you're a day trader, if you're a scalper, look at those time frame the market is moving. Look at how the market is making its waves. Take advantage of the impulse movement. Take advantage of the corrections. Make sure you are trading the impulse movement. That is where the market will give you a very good profit or a very good pips. You understand that now? So when it takes you more weeks to or more days to have a correction, and maybe in just 2-3 days, when market is creating impulse movement, market is up just like this. Let me show you something on the Euro GBP. Yeah, on Euro GBP. Okay, so let's use this as a very good example. These 4 hours. So imagine the number of days it took for this market to create these corrections. That's much. Then look at it when the market started dropping. A very fast movement to the downside. The market is down. So these are things you have to take note whenever you are running your back testing. Take note of this to journal. You have to write so that by the time you are picking these things on a live trade, you are making reference to what the market has showed you based on your back testing. And believe me, this is not just only thing. If you notice, I have the way I mark out my chart, looking at the levels I want to buy from, looking at the levels I want to sell from. And I promise you guys, in the coming week, I'll be having a sections like this posted on this particular channel. And that's why, don't forget, click on the subscription button. Yes. All right, guys, enjoy the rest of your day. And please don't forget, make sure you are following a proper risk management, irrespective of how good your trading plan, how good your strategy is. If you don't have a proper risk management, you'll be out of business. And never forget that you are coming to trade. Not for you to blow your account, but for you to make profits. Treat it as a business, and let's enjoy doing what we love to do. Thank you, guys. Let's see the other side of the game. Shout out.